Trading has a magnetic pull, an allure that draws people in from all walks of life. It's a world of numbers, charts, and constant movement, promising both excitement and potential reward. The idea of your money working for you, not the other way around, is a powerful motivator. It speaks to a desire for financial independence and a life where your time is your own. It's irresistible. The prospect of generating wealth while you sleep, or while pursuing your passions, is a dream for many. For many, it's a shot at financial freedom, a chance to break free from the constraints of traditional employment and create a life of abundance. A way to escape the 9-to-5 and build wealth on your own terms. It's about taking control of your financial destiny and building a future that aligns with your values and aspirations. But it's not just about money. While the financial rewards are certainly a draw, there's a deeper appeal to trading. Trading is a global puzzle, a complex and ever-changing landscape that requires constant analysis and adaptation. It's a test of strategy and discipline, demanding a cool head and a well-thought-out plan. It's a game of calculated risks and rewards. You're constantly learning, adapting, refining your skills, and staying ahead of the curve. The market never sleeps, and neither can your education. And pitting your wits against the market, it's a constant challenge, a battle of intellect and strategy against the collective forces of supply and demand. The internet has changed everything. It has democratized access to financial markets, leveling the playing field for individuals around the world. Now, anyone with a laptop and a bit of cash can participate in the global financial markets from the comfort of their own home, can join the action. The barriers to entry have been significantly lowered, making trading more accessible than ever before. Online brokers make it easy, providing user-friendly platforms and tools to facilitate trading. But this low barrier to entry is both an opportunity and a risk. While accessibility is a positive development, it also means that more people are entering the market without the necessary knowledge and skills. It's easy to get swept up in the promise of quick profits, lured by the potential for rapid gains and the allure of instant wealth, and forget the risks. The market can be unforgiving, and without proper preparation, losses can quickly mount. That's why understanding the basics is more important than ever. A solid foundation of knowledge is crucial for navigating the complexities of the market and mitigating risk. Every successful trader starts with education, investing time and effort in learning the fundamentals of the market. Knowing the markets, understanding the different asset classes, and staying informed about global economic events. The strategies: developing a trading plan that aligns with your goals and risk tolerance, and your own risk tolerance. Understanding your own limitations and emotional biases is essential for making rational trading decisions. Before risking a single pound, or any currency for that matter, it's important to approach trading with caution and a well-defined strategy. You need a plan. A comprehensive trading plan should outline your goals, strategies, risk management techniques, and entry and exit criteria. Trading isn't gambling. It's not about luck or chance. It's about making informed decisions based on analysis and strategy. It's about building a foundation of knowledge, developing a disciplined approach, and managing risk effectively. That's what separates the serious traders from the rest. It's the commitment to continuous learning, disciplined execution, and a long-term perspective that ultimately leads to success. Meet Liam and Noah, two ambitious young men ready to take on the world. They're about to embark on a journey, a financial adventure that will test their knowledge, patience, and risk tolerance. These two friends from Manchester were both craving more than their routine jobs. The daily grind was wearing them down, and they yearned for a chance to break free and control their own financial destinies. They wanted something more exciting, more challenging, and potentially more rewarding. After seeing yet another ad promising riches through trading, an idea sparked in their minds. The allure of financial markets, the potential for quick gains, and the stories of successful traders filled their imaginations. So, after many late-night discussions and weighing the pros and cons, they decided to give it a shot. They knew it wouldn't be easy, but they were determined to learn and succeed. They agreed to start small, each investing £1,000 of their hard-earned savings. This was their initial stake, their entry ticket into the world of trading. Liam was immediately drawn to the fast-paced, dynamic world of Forex trading. The constant fluctuations, the global nature of the market, and the potential for high leverage fascinated him. He was captivated by the idea that global events, from political announcements to economic data releases, could move markets around the clock, creating opportunities for profit. He particularly liked the idea of being able to trade after work, turning his evenings into a potential source of income. He began diving into the intricacies of currency pairs, studying charts, and following market news with a newfound intensity. Noah, on the other hand, preferred something more tangible, something he could understand and relate to. He decided to focus on buying shares in companies he knew and used, like Apple, the tech giant, or Tesco, the popular supermarket chain. He wasn't looking for quick riches. He wanted steady, sustainable growth over the long term. He dedicated his time to researching businesses, analyzing their financials, and thinking about their long-term prospects. And so their paths diverged, each drawn to a different corner of the financial world. Liam, eager to start trading currencies, opened a Forex account with an online broker. Noah, with his sights set on long-term investments, opened a share dealing account with a reputable platform. They made a pact, a promise to each other, to share their wins and losses, their successes and failures, as they navigated the complex world of trading. Little did they know just how different their journeys would be, how many challenges they would face, and how much they would learn along the way. Both were beginners, full of enthusiasm and optimism, ready to conquer the markets. They were eager to absorb knowledge, to learn from their mistakes, and to hone their skills. Their trading adventure was just beginning, a journey filled with uncertainty, excitement, and the potential for both great rewards and significant risks. Liam's first weeks in Forex were a crash course in new terms and fast-moving charts. Forex is about speculating on the value of one currency against another. No physical goods, just numbers on a screen. The market is massive and always open, letting Liam trade after work. He focused on major pairs like EUR-USD and GBP-USD for their high volume and low fees. Leverage was tempting. His £1,000 could control £100,000, but it cut both ways. A small move could double his money or wipe him out. After some painful demo trades, Liam learned risk management was everything. He studied technical analysis, watched economic news, and realized discipline mattered more than predictions. Forex was a game of probabilities, not certainties. Success meant managing losses, not just chasing wins. While Liam chased currency moves, Noah took a different route, buying shares in real companies. For Noah, owning a share meant owning a piece of a business. If the company thrived, so did he. The stock market had set hours which fit his routine and kept things structured. Noah focused on long-term growth, researching company fundamentals and industry trends. He learned to read balance sheets and spot undervalued stocks. Sometimes his investments moved slowly or dipped, testing his patience. Dividends were a bonus, steady income even if prices stalled. Noah's approach was about careful selection and believing in a company's future. It was less about quick wins, more about building wealth over time. Share trading was a marathon, not a sprint. Noah was in it for the long haul. So how do Liam and Noah actually make or lose money? In Forex, Liam traded in a decentralized market, no central exchange, just a global network of banks and brokers. His profit or loss depended on currency price changes, amplified by leverage. In shares, Noah traded through a central exchange like the London Stock Exchange, with transparent prices and volumes. He made money from rising share prices and dividends. Liam relied on technical analysis and global news, reacting quickly to economic events. Noah focused on company research, industry trends, and long-term prospects. Forex demanded speed and risk management. Shares required patience and business insight. Each market had its own skills and mindset. The right fit depended on your strengths and interests. Risk is everywhere in trading, but it looks different in Forex and shares. For Liam, high volatility and leverage meant big swings. One news event could make or break his account. Leverage amplified gains and losses, making Forex risky for beginners without strict risk controls. Noah's share trading was less dramatic. Stocks could drop, but rarely crashed overnight. His risk was tied to company performance, not wild market swings. With shares, losses were usually limited to what he invested. No margin calls or sudden wipeouts. For cautious beginners, shares offered a gentler introduction. Managing risk was about knowing your limits and choosing the right market. Liam's journey into the world of Forex trading was anything but predictable. It was a roller coaster of emotions, a constant dance between exhilaration and anxiety. One moment he was riding high on a wave of successful trades, the next he was grappling with unexpected losses. His first big win came early on, a stroke of luck and intuition when he correctly predicted a Bank of England rate hike. He had been following the economic news closely, analysing the data and taking a calculated risk. The result? A quick £150 profit in just a few hours. It felt like free money, a validation of his trading skills. But the taste of victory quickly turned sour. Overconfidence, a common pitfall for new traders, began to cloud his judgment. He started taking bigger risks, ignoring his initial trading plan. And just as quickly as he had made money, a bad trade wiped out £250. The market humbled him, reminding him that it doesn't care about feelings or ego. Chastened, Liam realized he needed a more structured approach. He started keeping a detailed trading journal, meticulously tracking his trades, analyzing his wins and losses, and identifying patterns in his behavior. He also began to pay close attention to his emotions, recognizing how fear and greed could influence his decisions. Most importantly, he committed to sticking to his trading plan no matter what. He learned a crucial lesson. In the fast-paced world of Forex, discipline and sound risk management strategies mattered far more than simply being right every single time. It was about managing the downside and protecting his capital. Noah, on the other hand, chose a different path, investing in stocks. His journey was a steadier one, characterized by careful research and long-term thinking. But even his path wasn't without its setbacks and challenges. He meticulously researched a promising tech company, analyzed its financials, and saw a bright future. Confident in his analysis, he bought in, and initially his investment paid off handsomely, with early gains boosting his confidence. But his optimism was short-lived. A competitor's new product launch sent shockwaves through the market, and the tech company's stock price began to plummet. The unexpected loss served as a valuable lesson for Noah, highlighting the importance of diversification. He realized that putting all his eggs in one basket was a risky strategy, and he resolved to spread his investments across different companies and sectors. Instead of succumbing to panic and selling his shares at a loss, Noah remained calm and rational. He held on to his investment, trusting in his initial research and believing in the company's long-term potential. Both friends, in their own unique ways, learned the invaluable quality of resilience. Liam learned to bounce back from the wild swings of the Forex market, while Noah learned to weather the slow recoveries of the stock market. The world of trading and investing tested their patience, their discipline, and their ability to adapt to ever-changing market conditions. The wins, of course, felt fantastic, providing a rush of adrenaline and a sense of accomplishment. But it was the losses, the painful setbacks, that ultimately taught them the most valuable lessons about themselves and the market. Ultimately, their journey was about personal growth and development, not just about accumulating profit. It was about becoming more disciplined, more resilient, and more adaptable in the face of uncertainty. Time commitment was a big difference for Liam and Noah. Forex's 24-hour market gave Liam flexibility, but also constant pressure. He was always on. It was easy to overtrade and burn out. Noah's stock trading had set hours, creating boundaries and a healthier routine. He planned in the evenings and traded during market hours, balancing work and life. Starting capital also differed. Liam could open a Forex account with a few £100s, but high leverage made it risky. Noah needed more to build a diversified share portfolio, but his risk was easier to control. For beginners, shares required more upfront, but offered a safer, more structured start. The right choice depended on your lifestyle and risk appetite. After a year, Liam and Noah compared results. Liam's £1,000 grew to £1,250, a 25% gain, but with stress and sleepless nights. Noah's £1,000 became £1,150. Slower growth but a smoother ride. So which is better? It depends on you. If you crave fast action, technical analysis, and can handle risk, Forex might suit you. If you prefer research, patience, and steady growth, shares could be your path. Both require education. Start with a demo account, learn risk management, and never trade money you can't afford to lose. Try both styles with virtual money and see what fits. The best traders know themselves and respect the risks. Whether you follow Liam or Noah, knowledge and discipline are your greatest assets. Your trading journey starts with understanding yourself.